Hey, this is July 19th, Saturday, and we're taking a peep at what the Bitcoin market is doing this weekend, or what are our thoughts on the Bitcoin, or what our thoughts on Bitcoin are. She, okay, all right, yeah. So let's go BTC. Now, usually I don't mess with crypto. Usually, I don't mess with crypto, most especially Bitcoin. I used to be of the opinion that the peer does not like me. So, yeah. Because most of the times when I analyzed Bitcoin, I always got stopped out. And to be very frank, let me just leave it like that. I always got stopped out of Bitcoin. No matter how logical the analysis seemed, I always got stopped out. So let's say price was trading inside this range, right? This was the previous highest point of Bitcoin, right? So this weekly time frame, Bitcoin is coming from down. This is 2016 prehistoric era. This is the very beginning. So we see Bitcoin doing its thing, doing its thing. So ta 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 ba bish ba new all time high, right? So new all time high, yeah. Now this became range high, and we continue to see downward movement. Basically, yeah, with how we trade, with the trading style, with this trading style, with the trading style, the um okay. So with the trading style that we use at OFX. Let's see if we would have been able to get any entries based off. Uh, uh, so with the trading style we use at OFX. So let's see if we would have gotten anything on the weekly. Let's see if we would have gotten anything with our trading style on Bitcoin. Because I mean, I mostly trade gold. Mostly. I mostly trade gold. I don't trade anything else aside gold. I don't trade anything else aside gold. So, like I pointed earlier, I don't like Bitcoin. Most times when I traded Bitcoin, I got stopped out here. So, mm, but I feel like I jinxed myself by saying I don't like Bitcoin. So like the guy pulls off for some form of revenge. So so let's see. So yeah. First weekly candle, January. January 25, weekly candle. We would have gotten a trade. January, this weekly candle too. We didn't get a sweep and pull back. Here too, we didn't get a sweep and pull back. Here too, we didn't get a sweep and pull back. Here too, we didn't get. Now though, here, as February 25, that's after a month, we finally got. That's what if we're trading with the weekly. Yeah. That's if we're trading the weekly time frame. So finally got a sweep of this range. That was the previous weekly high and low. So you could see a sweep, then a pullback, the opposing side. So would have gotten a different trade. So say we entered down here. Say we entered down here. SL just below that. SL just below that. SL just below that guy. TP here. Back the SL slightly below. The back the 1:5 trade. That means we have bought from around 94K to 98K, which is a lot of pips, to be very, very frank. Which is a lot of pips, to be very frank. So, I mean, it's a lot of pips. So yeah, February probably would have gotten a setup on February 25 since the beginning of the range at January 25. We have gotten a setup February 25. I said January 20, 2025. We would have gotten a setup February 17, 2025, almost a month after we were trading strictly with the weekly time frame. So continuing on the weekly, all right, sorry. So continuing, Jeff, 17th of February, 24th of February, nothing on the 24th. March, still nothing, because nothing was taken out. Nothing in March, nothing still in March. Nothing still in March. Nothing in April. Nothing in April. Nothing still in April. So I would have gotten only one good trade in how many months? I've gotten one good trade in February. And from February till now, would have gotten any trade. So basically, range high, range low. Now, as we could see, as price created a new all-time high, right? So we would have been expecting that the new weekly candle will come and take out this, then probably come to the opposing side of the range, but it didn't. So it was just going down, 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 till it got here. Now, I chose this as range low because of obvious reasons. I mean, as it got here, every other person is just like doing his thing, revolving around this guy. The other person is just every other person is just revolving around this. Every other person is just revolving around this guy. So you could see the next candlestick, they never reach there. Now this one opens, right? Takes out range low, pulls back inside. Hallelujah. So we're happy that range low has been taken out. So as range low got taken out, we would have layered our buys again. Have layered our buys again. We have layered our buys again. SL just below my guy. SL just below my guy. SL just below my guy. And TP just here. So probably wouldn't have taken profits, but at least we would have. This is a 1:4. And based on how we trade, 1 ratio, by the time we get to 1:2, we secure partials and set break even. So I've just been waiting for the trade because target would have been the opposing side of the range, which will be up here, but price didn't go there in one movement. And eventually, we still got stopped out at the end of the day, but still, we would not have been stopped out in any losses because we would have secured partials at 1:2. This 1:4. By the time price got to 1:2, we would have secured partials. And then by the time price got to 1:4, we have taken more partials, right? Then set B and leave the trade to run. So pretty decent, pretty decent. So price pulls back again, comes back to the taking out range low. This then becomes sell side liquidity that needed to be swept. So price came back, could not sweep this guy. So this became sell side liquidity too. This became sell side liquidity too. And this guy came, the savior, and swept everybody. Swept everybody. So after sweeping everybody, after this guy swept everybody here, it comes and closes back inside this range. Inside this range, it comes back to close inside the range. Yeah, so it's closed inside the range. Like that, like that, like that, like that. We continued experiencing upward movement till see a lot of all these buy side liquidities. So then there were a lot of liquidities to be sent home. A lot of liquidities to be sent home. A lot of liquidities just everywhere, just screaming. Liquidity, 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 liquidity. Oh, this one I did to cost this one, and this guy. So there are a lot of liquidities to be served. A lot. And price was going took out this guy. We took out this guy. Took out this guy. Took out this guy. And took out the previous all-time high. After I took it out, speaking, then whoop, new high. New all-time high. We experienced there was pullback as usual. There was pullback, so it's a new high. let's see, this would have been range low. 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 This guy came inside range low. This one came, took out range low because it became liquidity. This one came, took out range low, closed inside the range. Then we need to expect buys. So we have taken buys again. And the buys went chill. Took out this guy. So after taking out this guy, boom, break of structure. Taking out this guy, break of structure. New all-time high created. New all-time high was created. So there's one thing. After whenever there's a new all-time high created, there will be some form of pullback. So yeah, new all-time high closed well. So now leaving us with a new giving us with a new range, giving us a new range that we might get to trade. So yeah, this becomes range high, range low. For swing traders, some swing traders might be expecting some form of heavy sales. I don't really know because I mean, from this 123, it has crashed down to about 115. That's about $8,000 worth of crash. $8,000 worth of crash. So yeah. Eh? Oof. Sorry, a minute. Oh, all right. All right. Pardon the intrusion. So this became our new weekly range. So we switch to the sorry, switch to the weekly. Yeah. Now, as you can see, this weekly candle is going to close tomorrow. This weekly candle is going to close tomorrow. So we see where it closes. Range high got taken out, and we could see rejection. So we might be expecting it to get to the opposite side of the range, just expecting now. On the daily, what do we see? 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 What can we see? What can we see? All right. If we tried our trading style on the daily time frame, we would have gotten any sweet trades. Just buy. Here, no, this was July 12, no trade, July 13, no trade, July 14, no trade, July 15, no trade, same with 16, same with 17, same with 17, would have gotten a trade um on the 18th though, would have gotten a trade on the 18th. Took out the daily low, pull back, came here, came back. Point is that I've gotten a trade at least to almost the opposite side of the range. I would have secured our profit. Okay, so after 18, 19, still no trade. So, so as we can see, the rejection candle, all right, Still coming. Took out liquidity again, took it out, tried to take out this liquidity, but couldn't. So now if we trade now this is the weekly range, and this is the daily range. So daily range price might, if based off of how we trade here, we're going to wait for price to take out range low, because this is now range low for the daily. Price to take out range low, then we see movement. After price has taken out range low, then we see something like um, yeah, something like this. So we see something like this. Follow it to the opposite side of the range. That's on the small time frame, not on the daily time frame. On the lower time frames, that be expected for movements like this ish. Basically, we have to wait for chart pattern, then take our buys and pull it to the opposite side of the range in hopes that we don't get stopped out. Basically. All right. All right. So um based off how we trade, we would be expecting one side of the range to get taken out, right? Then we try to identify chart pattern. No, it's coming from an high. Liquidity gets swept. We pull back. That new that new liquidity gets taken out. Tip. Then then we could that new liquidity gets taken out. Then we could see break of structure. Then price pulls back and we follow it to the opposite side of the range. There's this, there's this, there's this type of pattern. Yeah, we could expect something like this. We could expect something like this. We expect something like, yeah, that's scenario one. That's scenario one. Oh, and by the way, we took sales. We took sales earlier, and the sales are going pretty well. So scenario one was this is the low of the range as it's coming from up. No, there's a day low as it's coming, as a new daily candle is coming, it takes out this low, pulls back, comes and take out that low. That's on smaller time frame, by the way, not on daily time frame. You can't see it just like this on the daily, really. Takes out the new low, pulls back, does a break of structure, comes back, and we use it an FVG on OB, tap, and follow it to the opposite side of the range. That is scenario. That's scenario one. Scenario two is just following it down. Team, notice this. Once there's a sweep, then follow it up. Don't even bother waiting for pullbacks or anything. So this is scenario one or scenario two. Basically, it's scenario two is the most safer scenario based off the fact that scenario two is the most safer scenario. I mean, we have like we could see market structure shift. It's coming from an high, it comes, sweeps the range low, pulls back, right? It creates a lower high, comes and takes out the previous low, that's a lower low, then it goes, breaks structure, that'll be an high, right? A lower low and higher high, was higher than this previous high, and a higher high, then a pullback to a fair value gap on OB and follow the trade from there. Scenario one is just like very, 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 very dope. Scenario one seems very dope to want to, trade with. The man seems very, very dope to trade with. So that'll be a break of structure. Break of structure, change of character ish. Look at this beautiful, beautiful stuff. Beautiful stuff. Beautiful stuff man would like to see, right? Very beautiful stuff man would like to see. Or like I said, we just notice the new daily candle taking out range low, a pullback, then that's all of this on this lower time frame, by the way. A pullback, then the new low, as the new low gets taken out, tap. Once that gets taken out, then we just follow it to the opposite side of the range. We just lay our trades. All of this on the small time frame. Because now it's coming. It has taken out range low. It pulls back. The new low that was taken the new low that was created gets taken out, then price pulls back. You know that when price pulls back, then we see that okay, we can see that you can see clear signs of a pullback. I just take the buy, more risky. Do you know that say this form of pattern is coming, takes out this low, pulls back, takes out the new low. Do you know that at the end of the day, we'll still wait for something like this um tap, tap, tap. We'll still wait for something like this. You understand? We'll still wait for something like this. Structure, pull back like that. We'll still wait for something like this until we get to the opposite side of the range. You will still wait for structure like that. We'll still wait for structure like this. We'll still take structure like this. Though now, instead of it being on a major as time frame, it could be on a less major time frame. It could be on a less major time frame. It could be on a less major time frame. So say this was supposed to be an observation on the 30 or 15 minutes. This kind of inside structure be like on the 15 minutes, be like on the 5 minutes. So we will see the low on the 15 minutes. We will see this new candle take out range low on the 15 minutes, and we see the pullback. Then it comes to still sweep liquidity again. Then it comes to still sweep liquidity again, right? Comes to still sweep liquidity again. Then after you swept liquidity like that, after you swept liquidity, we just still notice that pull back, come here, tap. Instead of it to create a lower low, it does a lower high. Again, it does a lower high, then an higher low, then an higher low like that. Just take the trade from the higher low and be following it. Take trade from the higher low, pre-construction number one, like that, pre-construction pullback, pre-construction pullback, like that to the opposite side of the range. So all these things here, it's just all these things here, it's just all these things here, it's just patience and observation, I guess. Now, if you remember, we don't trade in the middle of a range. We don't trade in the middle of a range. Don't trade the middle range. The range. Why? That's point one. Anything can happen in the middle of the range. Anything can. Can you stop kidding me? Right? Because anything can happen in the middle of the range. For instance, now this candle closed bearish, and logically, most people might feel like it should sell to take out range low, right? I mean, it makes sense that it does that, but there are often times where the candlestick closes bearish and it opens here close to range low, but then it pulls back and start heading for range high. So anything can happen. So trading the middle of the range is mostly for scalpers and shit like that. Our strategy does not allow trading in the middle of the range. So if you're going to trade the middle of the range, you have to Anything can happen, right? Aha, aha, perfect example. This candle closed bearish, right? This opened here. What would have been expectation? This candle closed bearish, this opened. Now, most people would expect that it will probably go down to take our range low. Though this closed like as a rejection. This closed as a rejection. I'm coming. This closed as a rejection. Let's look for an example to back up what we just said. Yes. 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 Look at this place now. It respected logic. It came and took out the low. Now see, this closed bearish. This closed bearish here. This closed bearish. Oh, okay. Okay, this was respected. That wasn't a trade on the 1st of July. This was respected. It was respected. It was respected. Closed bearish. Took out the low. Then went to the opposite side of the range. This closed bullish. Okay, it opened, took out range high, closed bearish. It was respected. Because I'm trying to show a scenario where it doesn't get respected. A scenario where it doesn't get respected. Why we shouldn't trade in the middle of the range. Look at this. Perfect. Look at this. Look at this. Perfect. Look at this. All right. So all right. So let's resume. Look at the reason why I said we shouldn't trade in the middle of the range. I pointed out that don't trade the middle of the range. Why? Reason number one, anything can happen. Reason number two, your usual risk, your usual risk might not that kind of situation. So basically, in that kind of situation, you would be a scalper. I think I pointed that out earlier. In that kind of situation, you'll be a scalper. So you'll be ready to run away because, okay, usually, yeah, when you wait, the point of waiting for stuff for confirmations is so that you can use as little SL as possible, right? Like I've mentioned multiple times um, on this stream that I don't believe in huge SLs. I don't believe in huge SL. the SL doesn't have to be huge to protect you. Personally, for me, the SL doesn't have to be huge, except the trade was taken on a 4-hour OB, except the trade was taken on maybe a 4-hour order block. Do you get that kind of thing? Except the trade was taken on a 4-hour order block, for instance. Now, a 4-hour order block might think I'm chill. Now, a 4-hour order block is going to be huge, of course. So your SL will be wide. But there's something called refining, right? There's something called refining. You there's something called refining. All right. Like I was saying, even with a 4-hour order block, here, there's something called refining. There's something called refining. You refine the entry. So a 4-hour order block now, right? The this is the column. The 4-hour order block, the SL of course is going to be going to be huge, and most traders can't deal with it, right? So as a trader, that's why you then are needed to refine that 4-hour order block further. You can refine it to 1 hour, you can refine it to 30 minutes. Point is, point is you refine it, right? So your SL would reduce. So you won't have to use too much SL, because like I said, I don't believe in SLs. So why I typed is your usual risk might not work. So for instance, you are someone that usually we are to risk usually we're generally advised to risk 1% of our accounts per trade. So now trading this kind of thing in the middle of nowhere, you don't know where it is safe to put your SL, right? You can't determine where it is safe to put your SL. You can now for someone with a $6,000 account, for instance, for someone with a $6K account, for instance, is 1% of his account is $60, right? So it took this trade in the middle of nowhere. This no trade in the middle of the range. It took this middle of the range trade, right? And um it took this middle of the range trade, and he wasn't able to properly determine where to put his SL. So he used his normal 60 pips. That would be 60 pips risk, right? Because let's say he uses let's say he uses 0.1 lot size for um let's say he uses 0.1 lot size to take the trade. So the trade can only move 60 pips backward. Now, this thing can easily go back 60 pips, and it is not wrong to go back 60 pips, right? So this point too is just basically you might be in a dilemma on what or where to put your SL. And if you can't determine where to put your SL, you would just put your SL somewhere. You just be taking risk that can lead to unnecessary SL. Basically, a risk that can lead to unnecessary SL. But like I said, it's for scalpers. Yes, it's for scalpers. All this kind of trading in the middle of the range. It's for scalpers. Scalpers are able to easily, you know, do their thing, cut their losses when they see the price is misbehaving, right? So, yeah, your usual risk might not work. Don't trade in the middle of the range because anything can happen, and your usual risk might not work for you because if you use your usual SL, if you use your usual SL, yeah, if you use your usual SL, you might get stopped out and you're then stuck wondering why you got stopped out. You understand that kind of thing. You might get stopped out and then price now starts going in the direction you want it to go. The point is you're not able to put your SL safe. Don't trade in the middle of the range. What are our signal? Let's don't trade the middle of the range. Anything can happen. Say mm, the most important point I should always remember. Notes. Yes. Always buy and sell high. Always buy low and sell high. Now, why? 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 Lesser risk. Lesser risk. And you can make the most. And more are more RR. Always buy low and sell high. Always buy low and sell high. So look at this for instance here. This is an high. Say we took a short from up here, a short from up there, a short from up there, took a short from there, a short from up there. Your SL will be so small. Your SL will be so small, so tiny. Look at that. Let's say you're even generous enough to use this with your SL just above this guy. Your SL is going to be so little. SL is going to be so little, yeah, like very, 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 very tiny SL. You might even be generous. And look at that. Markets did not go back there. And so far, it is still selling. Let's say it's even so. Let's even say we chose range low as TP or where the candle closed. Or let's say we targeted these sell side liquidities. Let's say our targets were these sell side liquidities. You see sell side liquidity here, sell side liquidity here, right? Sell side liquidity in all those places. You can see liquidities that need to be taken out in all these places. Yeah. So let's say we're targeting liquidities like that. The first liquidity got taken out. There was the first liquidity sweep. Did what? We took partials, set break even. This is 1:21. 1:21. basically. You're risking little to nothing. 1:21. 1:21 RR. So first liquidity got swept. You took partials, you set break even. Second liquidity, that's this liquidity, got swept again. Tap took more profits, you set break even, right? Then you left the trade to run. You left the trade to run because now this one now has liquidity, right? This one put back and close. This one has now become liquidity. You're now hoping that this one will open and come and take out this liquidity down here. Get that kind of thing. So selling low and buying high gives you the advantage to risk as little as possible to get more. So your risk to reward is going to be you risk very little for a lot. Very little for a lot. Talking from experience here, I have taken trades where I risk very little compared to how much I get back in return. So yeah, like I was saying earlier, don't trade the middle of the range. You see now, it makes sense that this comes down here to take out this guy, but guess what? Struggling to do so. Struggling to do so. Struggling to do so. Struggling really hard. Struggling really hard to come down and take out liquidity. Struggling to come down and take out liquidity. Struggling to come down to take out liquidity. It's just there, struggling. It's just there fighting for its life. It's just there fighting for its life. At this point, you can secure partials. You can, for scalpers, at this point, scalpers will have taken partials, set break even so that they will not get stopped out of the trade. You get that kind of thing. So so far we've been advised not to trade in the middle of the range because anything can happen and your usual risk might not work, might get stopped out. And you understand, just take unnecessary SL. Unnecessary SL. And important notes. Important notes. Yeah, I was looking for the right word. Important important notes. Always, I repeat, always buy high. Always, every time, every day, every scenario, every time, every day, every scenario. Make sure you always buy high. Make sure you always, make sure you always buy high. Make sure you always buy high. Yeah. Make sure you always buy. Make sure you always buy low and sell high. Don't buy high and sell low. Nope. Buy low. Buy from here. After this one comes and take out this one. If you see pattern that supports a push to the upside, you buy from there. So yeah, buying low. That way, you'll be able to risk very little. And then, you maximize the push. Yeah. Maximize the push. So moving on from the daily, we could see, okay, we've noted that, okay, this is what we are trying to observe. Coming from the weekly, we are like, okay, we've been able to establish a range. On the weekly, we've been able to establish a range. We've been able to establish a range on the weekly, which is we're able to establish a range on the weekly, which is here, see here, and able to determine that price took out range high and price might be gracious enough to come down to range low. Yeah. So then switch to the daily, then switch to the daily time frame, and we could see the previous daily high and previous daily low. That's the previous daily range, like that. And we could see that on the previous daily range, price closed sort of bearish, and we are expecting that this candle, this brother here, would come and take out this low, right? Everybody will come and take out this low. Then from there, we observe and see if price is going to form movement to the opposite side of the range, or price is going to form movement to the opposite side of the range, or price is going to continue on a downward push to, where we want it to be. But look at this. There's a lot of liquidity on both sides. This got taken out. This still there. I think they're taken out by anybody. Now for the so this guy came and took out this guy, came and took out this guy. So you could see two guys taken out already by this guy. Then it's pulled back. It pulled back, it's closed inside, right? It's pulled back and closed inside. Yep. And who knows? It might buy, depending on its mood. Not that we have any form of control over the market. So yeah, let's go back one more time to understand what we are doing here. This is the weekly range that we are hoping that it will probably be able to trade, right? Because price did what? Price took out range high and then started coming back inside the range. So that's why we're thinking that, okay, might probably get sales down here. Might probably get sales down here. 50% of this range. So this is the range. This is the range, and this is 50% of this range. Right, let's just represent it with a trend type of thing. All right, now we have the race to preserve battery, because live sessions drain battery. All right, so yeah. Oh, chai. Click was fire. Oops. All right. Okay, so this could be 50%. Okay. Okay, so this is 50% of this movement. So say sales play out. Say sales play out, SL will just be here, right? SL will just be there. SL will just be there, and we'll take this 1:4. We'll take partials, right? We'll take partials. Say we did instant execution of this sell based on the fact that, okay, it's closed inside, right? So it was an instant execution. It was an instant execution. Yeah, SL just exactly at where the liquidity is, because I mean anything that makes price come back might as well just go and sweep liquidity. So why bother stretching out the SL above the liquidity? Think about it. I mean, price can go sweep liquidity, then pull back, or just take your L. Easy. Just take your loss. Then observe what price does after it sweeps liquidity. Is it gives you opportunity to sell. Then you take the sell again. You know that you get to require loss, and if not, just let it be. Just let it rest. So here we'll take partials and set break even and watch for price to go to the opposing side of the range. Mhm. All right. All right. So this was if we were trading based off the weekly of what we observed on the weekly, this is what it would look like. So I mean, let's see if it cooks. Let's see. Let's see if it cooks. Uh, all right. So if we are trading based off of our weekly buyers, if we're trading based off of our weekly buyers, um, this is what our trade, this is what our trade will look like. So by the time we got to 50% of this range, we'd have taken partials and set B and watched and see if Bitcoin got to the opposite side of the range. Now, basically, we're here observing, we're here, we're here observing what would happen in this daily time frame. We're here observing what will happen if price is going to sweep range low and show us pattern to the opposing side of the daily range, or sweep range high and show us pattern to the opposing side. You understand? So for us, for us, yeah, okay. All right. Now, now on the 4 hours, you can see that what we were looking for down happened, somewhat happened up. So price is coming from a low, it creates an high, right? higher low, you can see you can see a pullback, something like this, right? We're looking for something like this on we're looking for something like this down there where it's coming from high, goes back, comes back, then follow it. You understand? So look at this for instance now. Look at all these lows get taken out. See all these lows get taken out. It's an uptrend, right? It's an uptrend. It's an uptrend. It's coming from a low. It creates an okay here a low and higher high. Now this is a low. This becomes a what? This becomes a lower low. Yes, a lower low because it's coming from a low. It creates an high and higher low and higher high. Now it creates a lower low change of character. It's sorry, forgive me. Forgive me. Let's go again. Let's go again. Let's go again. Let's go again. Let's run through this again. Let's run through the simulation again. So the price is coming from a low. It creates an high, and higher low, and higher high, right? Price creates an higher high. Now, price creates a lower low, not even a lower high this time, or even an higher low. It creates a lower low, then comes and does a lower high. You understand? That kind of thing. Now, it's here, it's doing its thing. It's here, it's doing its thing. This kind of thing. It's here, it's doing its thing. These are things that support what us wanting to push this thing downward. Because I mean, you can observe a change of character. You can observe, you can notice that okay, there's a change of character, and there's already a pullback. There's already a pullback. There's already a pullback to a fair value gap, as you could see. There's already a pullback to a fair value gap, right? Price already pulled back to a fair value gap and started reacting off of it. So based off of the 4 hours, so now looking at it, based off of the 4 hours, our sell that I mentioned earlier that we took might not be all that wrong because I mean let's just look at it. Just look at it. Just look at it. Let's run the simulation again. Price is coming from a low and high and higher low and higher high. Price changes character by breaking instead of it to now characteristics of an uptrend are um, characteristics of an uptrend. I mean, most of us know what the characteristics of an uptrend are, but let's just put it out there. Characteristics of an uptrend. High, yeah, high, higher, low, higher, yeah, high, higher, high. like that, the pattern is going to continue. So the characteristics of an uptrend are the presence of price coming from a low, creates an high, creates an higher low. An higher low is a low that does not break below the previous low where price is coming from. So an higher low, an higher high, an higher low, that is a low that does not break below, that does not close below the low, right? Where price was coming from, and high that breaks above the previous high, an higher low that does not break below the previous low, like that, like that, like that. That is what an uptrend is. That's what an uptrend is. It's coming from a low, creates an high, creates an higher low, right? That low did not take out this low. You understand? That low did not take out this low. Instead, it stopped here and took out this high, right? Then came back, did not still take out the previous low, but took out the high. Did not still take out the previous low, but took out the high. Did not still take out the previous low, but took out the high. This is what market structure looks like when it's an uptrend. And for a downtrend, price is coming from an high, creates a low, creates a lower high, right? Then go to break that high, right? Because now it's an uptrend though, then it creates a low. You think, okay, it's going to be an higher low, right? But after after an higher low, what are we supposed to see next? An higher high. But instead, after an higher low, it's after an higher low, after an higher low, it creates a lower high. So after creating a lower high, it comes and breaks that low. So of course, that's a downtrend already. So you see pullback that doesn't take out that high, a lower high that doesn't take out the previous high, but then it breaks the lower low that was created like that, like that, like that, like that. Doesn't take out the lower high, but takes out the lower low. Doesn't take out the lower high, but takes out the lower low. Doesn't take out the lower high, but takes out the lower low. Doesn't take out the lower high, but takes out the lower low. That is a downtrend. So now remember, let's remember that. Let's remember that on let us remember that um where were we? Where were we? We're talking about the fact that the 4 hours sort of supports the um mm, let's remember that the 4 hours sort of supports the fact that we feel we feel price might be bearish. So let's go back. Let's step back a bit. 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 Back to the weekly time frame. Let's go back to the weekly time frame. Now, on the on the weekly time frame, on the weekly time frame, all right. On the weekly time frame, let's start again. All right, now we're back on the weekly time frame. Now let's remember on the weekly time frame, we are trading this range, right? Price was previously in a range. Let's remember that on the weekly time frame, price was previously in a range that spanned from here to about here. Sorry, gotten that we use this high because after this guy got taken out. So we use this high because after it got taken out, we didn't see any other form of we didn't see any other form of we didn't see any other form of what do I call it? We didn't see any other form of highs, lows being swept. We just saw that price was just going one-sidedly in one direction till um um yeah, we're trading this range. Apologies. We're trading this I was trading inside this weekly range because an high was created that took out, this high, took out liquidity, and so from there, price started to crash down one-sidedly. There was um, no liquidities being set on other shit. Like you understand the range trading stuff, the range trading strategy. None of it happened. So it got here, then we saw is we saw a another we saw we got this that closed inside this range. Then we got this that took this sales and liquidities out. Then we got this guy that took out the sales and liquidities out and closed inside the range. And like that, like that, like that. We got these guys coming into we got these guys coming up to and they also sweeping liquidities and closing inside the range that supported the buys to the upside, right? So see the clean buys that happened to the upside. Now, after the buys that happened, so we're just going back a bit. After the buys that happened, right? So we picked out a new range. Okay, this is the previous weekly candle. Let's see if we can get something out of it, right? So we observed that the new weekly candle took out the weekly range, right? Took out the weekly high, took out range high, and started coming back inside the range. So we switched to our daily. We switched to our daily, and I mean we are bearish, but we don't want to be too forward. So this is a daily range. This is a daily range. We're expecting that okay, maybe we're somewhat expecting that maybe price would take out this range low, take out range low, and then from there we can determine the direction. After price has taken range low, we then observe for pattern on the lower time frames. So but we made a simulation where we took this trade on the daily time frame and we're just observing how it's going to be like. So we then switched to the 4 hours time frame. Now, welcome back, buddy. And so we've done a bit of catch up, so nobody's lost. Yeah. Now on the 4 hours time frame, we made an observation, an astute observation. We made an astute observation. What's the meaning of astute? I don't know what astute means. But you know what? Just consult with dictionary. They say, hey dictionary, what does astute mean? Astute. and critically discerning, keen insight or good judgment. Okay, so we're able to make whatever it is I said previously. Surprise was coming from low. Should we even map it out? Should we even map it out properly? Should we even map it out properly to further show what we are talking about? So hello, and I, hello, and higher high, right? And higher low, and higher high, right? Giving us the uptrend. Then my guy goes, creates a what? A lower low, which is lower than the previous low. So showing us that, okay, price is, what, doing something differently from what it was doing before. So that's automatically a change of character. So we see our, should we, if we are to even add this guy, tap, again, it did it again. Yeah, it did it again. It's pulled back, and now it is further buttressing our point that we might get sales. Understand? That we might actually get sales to the opposing side of the range. Like it just further went ahead to buttress the sales we wanted to take. Because I just mean change of character, price pulled back, right? If we are to ignore this guy, because it was the process of pulling back. Price pulled back to optimal trade entry, which is where I would have taken a sell from, which is here. Price pulled back there, and we can see a reaction from there. Price pulled back, after price change of character to the downside. Price pulls back. This is a fair value gap. 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 Now price pulls back. Price pulls back to the fair value gap. Price pulls back to the fair value gap. In my head of heads, I'd have taken this trade from here as price pulled back into this fair value gap. But like I mentioned earlier, I don't really like Bitcoin, so I don't really look at Bitcoin. I want to trade it. But look at that. Price pulls back into a fair value gap, and you can see it broke structure again. You can see it broke structure again. Broke structure again. You can see it broke structure again. You can see it broke structure again. Everything just further buttressing the fact that, okay, we might be getting sales. So Facebook back to 50%. That came optimal trade entry. That's like 60, around 62% of the fib. That's strong entry. Strong entry, and you can see price just pushed down beautifully. So as price pushed down beautifully, that's it started from around here to here. That's only 4 hours. You can see that price pushed down beautifully as after we took this trade. I took this trade, right? Price took out this low, broke a structure. Then after taking the broker structure, we could see price pulling back. And it's not even at the 50%, it's not 50% yet. Who knows Who knows? Who knows? Who knows? It might, might pull back here, might pull back and continue in its direction downwards. That's why I mentioned that don't trade in the middle. Don't trade in the middle. Don't trade don't trade in the middle of the range because anything can happen in the middle of the range. Anything can happen in the middle of the range. Don't trade in the middle of the range, guys. If we were more attentive when this happened, that's 14th of sorry, when this pullback happened, that was on Friday. If we had paid more attention to Bitcoin on Friday and we had noticed this movement, we probably would have taken sells on Bitcoin from around here. You understand? In expectation that it might get down here. But I mean, it still took sales nonetheless. Fingers crossed. It still took sales nonetheless. Fingers crossed. Anything can happen, and it's a risk we are willing to. You understand? The risk we are willing to take as a company. It's a risk we are very much willing to take. So at this point, we consider okay, our sell is still looking nice because this guy is still standing here. Has never even gotten. They never chop him. They never chop him. They're supposed to chop him. So he's still here. Still here, just sitting down. He's just here sitting ducks. Precost structure pullback. Precost structure again. Probably pullback. Precost structure again. And pullback. Precost structure like that, like that, like that. And we get movement to the opposite side of the range. Just saying, fingers crossed. Just saying, fingers crossed. And yes, also another reason why I don't trade in the middle is look at this now. After I took my trade in the middle of nowhere, where would I want to put my SL? I was supposed to put my SL up here, right? But that's too much. That's just too much. Too much. That's just too much. Too much SL because I mean look at this. There's no even fair value up here. But that's just too much. So I had to use my usual risk and um yeah, yeah. I think we've missed the good sales. Permit me to put it that way. Permit me to put that that way. I think we've missed the good sales. That's from up here. We've missed the good sales from up here. But nonetheless, we're supposed to even set ourselves probably be around here for the new trade. Let's say like around up here because the price comes to take out this high. That will be change of character again, and it might be bearish, may result in a bearish push. Anyways, guys, fingers crossed we observe and see what Bitcoin does. Let's observe and see what Bitcoin does through the week. I think I'm going to be ending the stream here. I would be ending the stream here. Streaming for long enough. And yeah. Yeah. Um, fingers crossed. Tomorrow is Sunday. Let me go and prepare for church.